Hey, it's Brian over at Showcase Agency. Hope you had an awesome Memorial Day weekend. We get a lot of questions about mortgage insurance. People want to know, are there programs where you don't have to pay mortgage insurance? Do you really have to put 20% down to get out of mortgage insurance? So we're going to kind of cover all of that in this really short video, and I'm going to show you 4 loan options with today's rate so you can get a feel for what the payment would be with different programs, how much cash would be out of pocket, that kind of thing. So hope you find this helpful. Let's go ahead and let's jump into it right now. First of all, let me just kind of give you an overview of these 4 programs. The first one is a conventional loan with what's called lender-paid mortgage insurance. So if you haven't heard of that before, it's just simply where the interest rate on the loan is a little higher, but you don't have mortgage insurance. It's covered by the lender. So there's no monthly mortgage insurance payment. It's just kind of rolled into your rate. The next one we're going to look at is also conventional, but instead of the lender paying for the mortgage insurance, the home buyer pays for the mortgage insurance. And this is the typical kind of mortgage insurance loan that most people are familiar with, where you've got a monthly mortgage payment or a monthly mortgage insurance payment included in your monthly mortgage payment. So we're going to cover that too. We also have an option here, FHA loan with discount points. So what are discount points? Those are points that you use to buy down the rate. So when the rate gets lower, the points go higher, and the points are a percentage of your loan amount. So as your rate goes down, the money out of your pocket goes up. And the opposite of that is true. If your rate goes up, then your money out of pocket goes down. And that's the FHA option that we're taking a look at right here. So let's get into this. Let's take a look at these real quick. And if you have any questions, just feel free to reach out to me. You can always text our office at 949-518-0742. I'll see the text as well as Karen, and we'll get back to you as soon as we can. The first option, conventional with lender paid. So we've got all of these at a $600,000 purchase price, just to kind of make it easy to to compare. This one's with 3% down. That's the minimum down payment on a conventional loan. It's a great program. You have to be a first-time home buyer to be eligible for it, but it's 3% down. Now, 5.875 is the rate today on this program where the lender is covering the mortgage insurance. So let me show you this really quick. Right here, this button that says More Info. When you click on it, there's a tab for payment breakdown, closing cost, and reinvestment. Now, if you look here at this payment breakdown, what you'll see is there's no mortgage insurance. So you've got $100 towards tax, $100 towards insurance, $625 towards taxes, $34.42 towards the mortgage. That gives you a monthly payment of $41.67. No mortgage insurance. So that's your estimated monthly payment. And when we jump over to closing cost, you'll see right here where it says points. You've got $9,952 in points. So again, points are used to buy the rate down. If you didn't have those points, then the rate would be higher than what it is. So let's go back here and let's keep on going. So we're at 5.875. The payment's at $41.67, which we saw. And then the cash to close is about $39,000. So that gives you, and that includes that $9,000 that we just took a look at. So if you went with a higher rate, of course your payment goes up, but the cash out of pocket goes down. Let's take a look at this next one. Again, $600,000 purchase price, $582. That's 3% down. This is the loan that has monthly mortgage insurance. So you'll notice right away the interest rate is quite a bit lower. And let's take a look at how that affects our payment. So you see here we've got a $41.16 payment, $4,116, which is about $50-something less than the lender-paid mortgage insurance. So here's the cool thing about this buyer-paid mortgage insurance. The monthly mortgage insurance is $266 per month, But here's what happens when the loan gets old enough and there's enough equity in your home, then the mortgage insurance can be dropped. So if you went with this option where you've got the buyer paid mortgage insurance, the great thing about it is in a few years, that mortgage insurance is going to drop off, and you're going to be able to have a lower payment without you having to refinance or do anything, go through any hassles or anything. So now let's go back and let's take a look at, so we looked at our payment, $41.16. This one's got a little bit less cash out of pocket, $37,791. So between these two, I would go with a buyer paid mortgage insurance. I would recommend buyer paid mortgage insurance. Sometimes that can change depending on the rates on the program, but right now I would say this buyer paid is the way to go. On the FHA loan, again, $600,000. This is 3.5% down, but there's a 1.75% upfront mortgage insurance premium. FHA loans have 2 mortgage insurance premiums. So the upfront premium is 1.75%, and so that's basically, tacked onto your loan. That's why this isn't 3.5% of $600,000. You'll see the rates a lot lower. FHA rates are always a good bit lower. The payment is our lowest payment, also $39.8714. But our cash out of pocket is the most at $40,935. And we'll go over here and we'll see the breakdown. You can see with the mortgage insurance, it's a whole lot more with FHA loans than with the conventional loan, $406. Now, with FHA loans, the mortgage insurance most of the time is going to stay on the loan for the life of the loan. Now, it does get recalculated every year and it goes down a little bit, but it's a little bit every year. So it takes a while before you really notice it. But $406. So even with that high mortgage insurance, the payment is still the lowest. And let's take a look at where we are with the closing cost. So we had points of 9,900 on that first option. With the lender paid insurance, mortgage insurance, we had the buyer paid mortgage insurance that has about $8,700 in points. And you see right here with FHA option, we're around 9,102 in points. Now let's take a look at our last option. Again, we're at 600,000. We're putting 3.5% down. This is FHA loan. But the difference here is we've increased the interest rate so that we can get a lender credit. We put the interest rate at 5.25. That drives the payment up to $43.85. But look what it did to your cash out of pocket. It is definitely the lowest. So it's a good bit less than all of the others, and that's what makes this kind of loan attractive to a lot of people, where they can get in with the least amount of money possible and hang on to some of their cash for reserves or moving expenses or whatever. And then again, we'll go up here to more info. You'll see $407 is the mortgage insurance, the payment $43.85, and what you'll see here is that the closing cost, you got a credit of $8,813. So if you look at these two options, this is a difference of about almost $18,000 when you go from costing $9,100 to actually getting a credit for $8,800. So that's about a $18,000 swing or so right there. All right, so let's wrap this up. I hope you found it helpful. Oh, you know what? Let me show you guys this thing. This is a neat little chart. It shows you your savings over 60 months. It shows you which options are going to have the most savings. It shows you which options you would actually pay the most interest in mortgage insurance. Kind of interesting, right? So in 15 years on the option that doesn't have mortgage insurance, because it's paid by the lender, you're looking at about $450,000 in interest and mortgage insurance in 15 years. And then on this option that has mortgage insurance to start, you're looking at estimated $410,000. So you actually save like 40 grand on that second option. So that's what this chart here is good for. So again, hope you found this helpful. If you would like one of these prepared for you, we're happy to do it. There's no cost, there's no obligation. You can be working with another lender or talking to another lender if you want. We're happy to put together a quote for you. You can do it a couple of ways. You can either go to, let me show you here, you can go to showcasecall.com. So if you go to showcasecall.com, you can just schedule a discovery call with us, and while we're on that discovery call, I can put together the estimates for you, send you a link, we can look at them together, or we can just talk about your plans, whatever works for you. Also, let me go back. Also, another thing that may interest you, if you don't want to do the discovery call, but you do have questions, just reach out to us. You can text us at 949-518-0742, and we're happy to help. Hope you found this video helpful, and talk with you soon.